This is my first opportunity of a live interview here in our studios with Gami Noyane. She's the head of economic research at Ecobank Group in London. She's currently in Nigeria for a very short, of course, official visit. Good morning. It's good to have you.
Good morning.
Thanks
Thank
for
you.
coming.
Thank you.
Yeah,
too.
we appreciate you coming into here to see us, making this happen. Sometimes we'll see you on Skype and all that.
True.
Now you talk about the Nigerian, you would talk about inflation, we talk about MPC and all of that. So we're wrapping up the year, as it were. So when you sit down and you look at what we've done so far on the road we've traveled in 2017, give us an overview of the markets in general in Nigeria that you've looked at over the last 52, well, close to 50 weeks already.
Yeah. Well, I think we're really upbeat that that progress is being made with regards to the Nigerian economy. We've seen the economy exit a recession, and we've seen growth actually picking up. It's still very fragile, and there's a lot of uncertainty still in the market, especially with the foreign exchange market. But yet, with the fact that oil prices have picked up and production has picked up, I think that's given some confidence, restored some confidence among the investor community.
Currency was one headline story from last year all the way into today's year. So how much do you think we've been able to achieve?
I think the fact that they've introduced that NAFEX window, I think that's been the main source of stability for the currency right now. It's working at the moment. Yes, there's still multi-tiered exchange rates, which to some extent it makes some foreign investors a bit nervous that, okay, well, I don't know which rates if I'm entering the Nigerian market, or what if there's a devaluation, a sudden devaluation, etc. But for now, it's working. We've seen foreign exchange liquidity pick up. So far in Q4 this year, what we're seeing in the window, the average turnover has been actually higher than what it was last year and in Q3. So that is a very good thing, and it shows that there's some improvements in the market. We've seen the Eurobonds yields being well oversubscribed. So that's just an indication that confidence is slowly seeping back.
What more would you like to see as far as the FX market is concerned? Do you think we've done enough adjustment, if you call it devaluation? Do you think we've closed enough gap? Do you think Nigeria is comfortable or should be comfortable with the current gap between the various rates, as it were? What's your view?
I think at the moment the authorities are very comfortable with what they have right now. Because
are you comfortable?
No, because from an investor perspective, there's still a lot of uncertainty. I mean, if you look at trend levels of what Nigeria was, in terms of the inflows Nigeria was getting before the crisis, about 20 billion, per month. Now it's only a fraction of that, about 2 billion. So that's just an indication that the investors, the foreign investors, are still not comfortable with whatever system that you have got operating here. And so there needs to be some kind of reunification in terms of the currency, and reduce this multi-tiered exchange rate and just have one currency floating in the markets. But for now, I don't think that's likely to happen. Elections around the corner, and devaluing the official rates, the 305 rates. I don't think there's any appetite for that by the authorities. So we'll continue to see this multi-tiered exchange rates, which of course will sustain uncertainty in the markets. But I think as long as oil prices and oil production are picking up, then there's some assurance that things are likely to continue to improve.
If you look at the currencies market and everything, you see the kind of rates and whatever, and you look at the undercurrent of the macroeconomic environment, do you think the naira, the exchange rate market and what have you, basically a child of circumstance?
Well, yeah, it is, because the only reason why we've got the foreign exchange reserves picking up now at 34 billion, it's because of the oil markets. If there's any major shock to the oil markets, say for instance Saudi Arabia decides, okay, well, we're not going to continue with this cuts anymore, these policy cuts, or if there's another, or US shale oil gas actually just supplies the markets with a lot of, there's an oversupply in the market, then of course, that's going to affect the Nigerian economy. And then if there's any more further problem in the Niger Delta, although we're not anticipating that at the moment because there's still some kind of negotiation between the government and the militants, then it just shows that the oil market is Nigeria's alpha right now. And anything that happens to the oil market will destabilize the entire foreign exchange system.
Do you think there's a problem, an underlying problem with the structure of the economy that needs to change?
Absolutely. First of all, you've got the lack of flexibility in the foreign exchange markets. I'm not talking about the NAFEX rate, which is flexible, but just the fact that you've got the multi-tiered rates, and it's various rates for various goods and services or for various transactions. That alone is a reflection that structurally there's a problem in the markets. And then you've got the 305 rates, which seems rigid, and you've got the other rates as well, which is also a problem, the interbank rate.
Let's talk a little bit about the Eurobond. We're borrowing rapidly and massively, and we keep supporting budgets, and it looks like this is becoming a bit of a musical chair. The more you roll it, the more it comes around. This is good for foreign investors who want to pick up Nigerian assets. So as far as they get paid, and there's a nice yield on it, they go for it, isn't it? But the country would have to cough out this money at some point. So if you look at the various risks, whether it's currency, or political, or other, what's your view on this borrowing?
Well, I think, first of all, Nigeria has the capacity to borrow externally, because if you compare Nigeria with many other African markets, the external debt or just the general debt stock is relatively low. What is a problem is the debt servicing cost, and that is relatively high. It's higher than most other economies in Africa. It's about currently 40-something%, about 45% of total revenue. So which is really high, and it just indicates that if there's any major shock in the oil markets, Nigeria is really going to come under a lot of pressure, further pressure to repay those debts. At the moment, we're seeing that oil and gas sector is saying that the oil price is expected to remain bullish for a while in the short term. So beyond the short term, we don't know what's likely to happen. So now is the time we think that diversification has to take place, whether it's in the services or become a hub, a tech hub, or, there are lots of startups in Nigeria. So I think for the time being, it's working for the economy, and that will continue to make NGN assets very attractive to the foreign investors. Because if you have a dollar bond of about 6-7% against the US Treasury bills of 2%, of course, it's a no-brainer. People will come, there'll be a lot of appetite for your bonds rather than...
But this portfolio investment hardly grow the core economy. That's the problem some folks have with that.
Yeah, it's grown a lot, and there's a problem there because there's still a lot of uncertainty with exchange rate markets, and for as long as that remains an issue, people will be able to... What
naira-dollar rates are international investors looking for? Give me a figure. You're the one who sits with them in London. I'm here at the local front. What figure are they looking at?
I don't think they're looking for an actual figure. What I think they're looking for some, there's stability, but they're looking for just one figure. For instance, if you go into the Ghanaian markets, they're just, on the interbank rates, you just have just one particular figure, and you don't have a multi-tiered exchange rate. Of course, there's a black market, but you don't have a multi-tiered exchange rate where you've got the official rate 305, you've got the intervention rates of 325, 330, and then you've got the NAFEX rates of 360. So I think they're looking for some kind of unification, because for now when you speak to them, they say, well, I'm not putting my money there because I don't know which rates I should go with, or whether there's going to be a sudden devaluation. So there's still a lot of uncertainty, and they're being very overcautious that, no, it's still not a market to touch right now. Even if I have billions, I might just put a fraction just to see how it goes. Because,
in the Nigerian market.
In the Nigerian market.
Do you think, therefore, that we need, do you think it's time for Godwin Emefiele or the central bank to start pulling off one of those layers of rate, for example, maybe the one for the SME, and begin to reduce these layers one after the other?
I think there needs to be a convergence, but whether the political will allow that is another issue.